Good day and welcome to the Google Hangout. If you've got any questions for our CEO, Mike Brown, please post them on our Twitter handle at #AskMike. Mike, good set of results. We've got one of the questions coming in. What were some of the highlights for you and what drove the numbers?
So I think to be able to produce just over 15% growth in headline earnings in what is a very tough economic environment with an escalating regulatory agenda is a really good outcome. So for me, if I unpack those a little bit, I think what was particularly pleasing was our strong non-interest revenue growth. That was up just over 10%. At the same time, we have been very disciplined around our expenses. So cost growth is up just over 7%. And really pleasing to see that despite the difficult economic environment, our credit losses are still slightly better in the first 6 months of this year than they were in the first 6 months of last year. And that's a lot to do with us being more selective around credit origination over the last couple of years. So those collectively have driven growth in our, let's call it, South African businesses of just over 10%. And then I think really pleasingly, we're getting a kicker to growth of around about 4 or 5% from our activities in the rest of Africa that lifts that South African growth rate of 10 or 11% up to the just over 15% growth rate.
Mike, that's great growth in the rest of Africa. And Africa is obviously becoming very important for our clients and stronger economic growth. What drove those numbers?
So I think for us, the way we think about our strategy in the rest of Africa, we've really got two buckets that we think about. In SADC and East Africa, which is where we want to own, manage and control banks, we have operations in Swaziland, Lesotho, Namibia, Zimbabwe and Malawi. And we have just bought a stake last year in Banco Unico in Mozambique, 36% that we started with, but we're going to just above 50% sometime during the course of next year. So we saw some good growth from our existing businesses in SADC and East Africa. And we've continued to invest in these businesses. So, for example, in March this year, we implemented a new core banking platform in Namibia. Then if you shift to Central and West Africa, there we have a partnership approach with ETI as our chosen partner. And really, at the back end of last year, we invested about 6 billion rand to achieve a 20% stake in ETI. So if you think about that in accounting sense, that stake was not there in the first 6 months of last year, but has contributed to earnings in the first 6 months of this year. So collectively, from a return on investment point of view, with the net of funding costs, ETI contributed about 246 million rand to the growth.
Mike, you mentioned earlier that it's tough out there for consumers. We've got a question here. What is Nedbank doing to help consumers? And we're seeing the credit loss ratio being quite low. But what is Nedbank doing for its clients?
So I think from a Nedbank point of view, we always start out by being a responsible lender and ensuring that we make sure we only lend to people who can afford to pay us back. I think that's the most responsible thing we can do for any of our customers, is never, and sometimes this does happen, but never put people in a position where they can't afford to pay us back. Then if people do get themselves into challenges, because inevitably people's circumstances change during the life of a loan, we try and work wherever we can with our customers to either restructure their accounts, to enable them to remain in their homes. So we do everything that we can before we foreclose on customers, because that's ultimately always our last resort.
Mike, NRR is up strongly. Are there more people banking with Nedbank?
So I think that's a really important thing for us in the first 6 months of this year. If you take our total customer base, that grew by just over 6%, and now more than 7 million South Africans choose to have some form of banking account with Nedbank. But of particular importance are those customers who we refer to as main banked or primary customers. So those are the people who choose to have their salary deposited into a Nedbank bank account and run most of their expenses out of those accounts. And I think there, very pleasingly, we saw 8% growth in main bank customers to around about 2.5 million South Africans.
Expenses were very well managed, just over 7%. And one of the things that was mentioned in the results announcement is the continued investment in the franchise and the concept of branch of the future. What is that, and what does it mean for clients?
So really what we're doing at Nedbank is we're taking the existing branch structure that we have and infrastructure and refreshing it. So anybody who's walked into a branch of the future, and if you haven't, you should do, you'll see a completely refreshed experience for customers. It's a much more digital, it's a much more high-tech, and a much more, I think, customer-friendly experience. branches might be slightly smaller, but I think it's a much more intimate experience for customers. And over time, we're going to roll that out across all of our branch infrastructure.
Mike, one question from probably an investor is, how did Nedbank deliver value for its shareholders, and what's the dividend you're paying?
So I think the way we think about our business from the eyes of an investor is that value creation is a combination of three things. Firstly, growing the net asset value of the business, and that grew by 6.1% in the first 6 months of the year. Secondly, in the strategies that we have in the business, taking that net asset value, or effectively the capital of the business, and deploying it in a way that produces a return on capital that's greater than the cost of capital. And again, in the first 6 months, our return on capital increased to 17.3%, well ahead of our cost of capital of 13%. So that gap between the two that we call economic profit grew by nearly 60%. And then using that economic profit, or profits that we've generated, to pay a growing dividend stream to our shareholders. So in the first half of this year, we declared an interim dividend of R5.37, which is 16.7% up on the corresponding H1 dividend of last year.
One last one that's just come through is, it's a tough macro environment out there. What is the prospects for Nedbank hold going forward?
So I think we're clearly aware that it's a tough macro and regulatory environment out there right now, but that's not a surprise. And we think that our strategies are appropriate for a tough macro and increasing regulatory agenda. So as always, we provide reasonably detailed forecasts to the market, or guidance to the market, for the balance of the year ahead. And at the interim stage, we've made no change to those. So essentially, at a bottom line level, we expect that our organic growth in diluted headline earnings per share will continue to be above nominal GDP growth.
Thank you, Mike.
Thanks very much.
Thank you.